Good morning everybody, let's have a look at Bitcoin. We're only going to look at Bitcoin. I'll keep this video nice and short. I appreciate everyone seems to like early morning videos, so I'll keep up with this routine if I can. So yeah, basically the pullback took a deeper plunge than I thought it was going to do, to be fair. With that, now we should potentially think that either this wick has marked the low, because it front run the horizontal, which is down here, and basically mimicked the two candle bodies from back here at the end of last year, or we're going to go to Rec City. And Rec City isn't too bad. Rec City is around, give or take, and again, the numbers are within a few $100s, around the $88,000 to $87,000. Which again, you know, when you think about it, you know, a Bitcoin at that value is pretty awesome. But if we're looking for percentages, yeah, if we lose the 90, we'll call it the 91, then we're looking down there. But that's not bad though, is it? I mean, come on, let's face it. What's the context of this? You know, so we come down another 2.5% to a maximum of another 7.5%. Come on. I eat that for breakfast. That's fine. So there's your daily, there's your measurements on the daily. Again, the 4-hourly lost all moving averages at this point, but does have 3 drives of hidden bullish divergence, which might be enough for it to turn around, really. It might be enough for it to turn around. And then you take it down to an hourly, and it looks absolutely horrendous and shocking. So I've not even been able to reclaim that 20 or the 21 moving average. So, and I suppose if we do see a reclaim on that on the hourly, you might be looking for the death cross retest, so a push back up to $97,000, thereabouts. But remember, it's not just a Bitcoin event. This is an everybody event. Look over to the S&P. Same thing going on here. Death cross, rejection around the Bollinger Band Center. Take it to a 4-hourly on the S&P. Yeah. Death cross retest down below all moving averages. Doesn't look as bad as Bitcoin, but it doesn't look great. Well, you take it to a daily, and yeah, it's the same deal. Same deal. It's all the same. Everything behaving the same. So when everything behaves the same, sometimes you have to look at the higher, the bigger picture, the broader picture, which is Forex. And there's a lot of shuffling going on Forex at the moment because of, well, I don't know what I can say. I don't know what I'm allowed to say. My YouTube channel is basically, I'm pretty sure, in some way being scrutinised by things I might have said in the past. But some people saying some things on a global stage, and it basically interferes with Forex. We also had the FOMC minutes as well. There's all kinds of things that's going to start to reshape the Forex market, especially over the next 10 days, 2 weeks. So the dollar is strong. We've seen that there's been a strong dollar. In fact, having a strong dollar has been something that we spoke about yesterday, and something I spoke about sort of a couple of months back when we hit this 200 simple. And I said, I suppose this is the place for a bounce. It was an obvious call for me because this is the bread and butter of my analysis, really. Lower term moving averages, bouncing, giving major supports. But yeah, that's what we've seen, and that's what's happening here. A lot of people thought it was going to break down from there. That would have been optimistic. It would have also caused an early end to the cycle, in my opinion. But the fact that it bounced is still relatively healthy. However, we do really kind of want to see it sort of start to slow down at some point. We had the bearish divergence. It doesn't seem to have played. Again, it's moving in the face of words that have been spoken and continue to voices that continue to speak. They're not stopping speaking, and with that again comes volatility in Forex, which at these higher levels, yeah, it could send the market one way or the other. I still believe that my overall analysis on the total 2 and obviously Bitcoin is correct, and that's what I believe. And as far as time is concerned, yeah, it's time for consolidation. You know, we had the breakout, it's time for consolidation. We had a consolidation, but I don't want to see it go lower than the previous low, if that makes sense. So a little pullback is fine, but we don't want to see a lower low. And right now we're getting quite close to it. So a lower low is anything below 91,500, and that'll take you down to around 86, well 87, 88. Right, good luck out there. Take it easy.